Hello and welcome. My name is Jason Ramos with daytradingfearless.com. What we do is we do daily support and resistance trade levels zones for the S&P E-mini futures. This is a tutorial of how to use them. It's probably going to be a two-part tutorial. So there will be two videos associated with this. So let's start with the first is, if you're already a member, just go to the login. Okay, once you're at the login, enter your username, password, and then go to the members section. If you're not a member yet, just go to the subscribe and you could sign up currently. So it's month to month. You could cancel at any time. If you cancel halfway through the month, we'll just still let you keep getting the zones until the end of the month, or until your membership expires, your 30-day subscription expires. So from the members section, okay, all zones are updated by 6 p.m. Eastern time. Okay, so we update our zones after the market every day, and they're good until the following day when the market closes, that S&P E-mini futures at around 4:15 p.m. So it kind of gives you about a 24-hour window of when to use these trade zones. Once you're logged in, go to a daily trade zone tutorial. That's where this video is being shown from, or you might have found it on YouTube. Also, trading psychology videos we have. Okay, these is a 1-hour series that I've done personally, all about the psychology of trading. And then there's also trading education videos for the S&P E-mini futures. If you go here, you'll see more videos all about what the S&P E-mini futures are, how to trade them, different strategies, and you could go to the YouTube channel, and that's where a lot more videos. I think I have about 8 to 10 hours worth of video content of education on there. So now let's get into the trade zones. So every day after the market closes, this is where everything will be updated in real time. You could see we're filming this on Saturday, April 23rd, 2016. If you use Thinkorswim, then you could click this link and actually download the zones already prepared for you on a chart personally, through that I do every single day. Or if you just want to look at the chart, just click on the link. It'll redirect you to here. Click on this chart right here and it'll expand the chart. And you could see these are what the trade zones are. Okay, and then we also have VPOCs, which are virgin points of control, also known as naked virgin points of control, and then gap levels. So these are the zones that are updated. Resistance is going to be above the current market. Okay, so these are 2112 in a quarter by 2114 in a quarter. All trade zones are 2 points wide, and I'm actually going to go over how to trade them, different strategies to trade them, and where to take stop losses, profits, all that stuff. So we'll go over that in the videos. So, but right here, and usually I just will show you the most current 2, 3, 4 trade zones, wherever they are, depending on the market volatility. And then today's support zones are going to be below the current market, 2072 and a quarter to 2074 and a quarter. Okay, over on this side, we're going to look at open gaps, naked VPOCs, okay, or also just VPOCs, virgin points of control, same thing. And then Fibonacci pattern targets, and I'll go over how we get these, and these are kind of bigger targets that I kind of look for. So now let's take a look at the chart, okay? This is what you'll see on a daily basis through our charts if you're a Thinkorswim user. If you're not a Thinkorswim user, okay, a couple of the things that you could actually do is if you use Stage 5 Trading or another brokerage firm, you can always just take these trade zones, okay, right here, and just plot them through rectangles on your own chart. That's all I do for my charts. As you can see, all this is if I go to studies, rectangle, and I'm just drawing rectangles, okay, and I edit, I change the color, and I edit up to the date, okay. But being a Thinkorswim subscriber or user, I'm actually giving you these charts that you could just download very simply and quickly, and pretty much have it all done for you on a daily basis. So that's all you need to do. Again, if you're using another broker, just to come in, take these numbers and just plot them on your charts, okay? Now, what I personally do is once a zone, and these are kind of the rules of how I trade and all that we're going to get into, but as you can see, I have zones all the way down here, okay? Up here and down. They haven't been touched for a long time, right? We even have gaps and VPOCs and all that way down here, even at the 1800 levels, 1850s and all that. Once I put those zones on, they're actually going to be on the chart until I actually, until price actually hits, okay, until it actually touches the zone. Once it's touched, very important rule, once the zone has been touched, it no longer is valid. Doesn't mean you can't still trade it or it might not work or it will work. For my rules, once it's been touched, it's done. The zone no longer, even if it's by a tick or touches it exactly to and then pulls back, I'm done. If it goes back to retest it again, I'm not going to play it. So again, those are my own personal rules. You can have your own rules however you like with them. But the way the zones are set up is it's based off of multiple things. Fibonacci levels, the zones are also based off of prior highs, prior lows, market profile levels, a lot of different things. So how do we trade these zones, okay? Well, a couple of the things that I look for with the zone is they're 2-point wide zones. The way I trade them is I always give an extra 1 point, okay, to the back of the zone. Okay, so I draw them as 2 points, but I know mentally, okay, it's a third point, because the whole premise to this trading of the zones is you're either right or right out of the trade. Okay, and as price falls, okay, and we'll give an example, we'll kind of move this zone up right here. Something like this, right? Let's say this is all we see. Well, as price is coming down to the zone, okay, I'm going to enter long potentially here at the front of the zone. So this zone we'll say is 76. So I enter at 76 and my stop loss would be 73. That's a 3-point stop loss. Now, maybe you don't want to take that much risk because that's $150 on one contract, okay? Well, you could maybe buy halfway in the zone. You could put your buy entry somewhere right in the middle of the zone, or you can even play the back of the zone. Now, here's the problem with doing those types of trades. You're not going to get as many trades, right? It's kind of like there's a lot of times where price will just come right into the zone. Maybe if you do halfway, it'll touch it, but then it'll bounce and you'll never get filled, or maybe you'll miss it by one tick and then it rallies. Same with the front. Okay, so there's many different ways to trade this. Not saying every time it's going to work, but a majority of the time, I would give it 80 to 90% of the time the zones do work to where you're somewhat in the profit at some point. Okay, now another way of trading the zones is you would do your first entry. Okay, let's do this. So your first entry might be at the top of the zone, right? Boom. Now, if you're somebody that scales, maybe your second entry will be in the middle of the zone, and the third entry would be at the back of the zone, and then your exit is 1 point behind the back of the zone, right? Now, there's a lot of times where price will come into the zone, the buyers step in, and then price rallies, okay? What this does is the zones are meant to be where are the buyers and the sellers potentially going to step in, okay? And these are very high probability trades. Do they work every single time? No, they don't, okay? You will have times where price blows right through and then it stops you out and you take a 3-point loss or a 2-point loss. But there's also going to be many times where it touches the zone, comes in, picks you up, and then rallies, and you get the bounce, okay? We're just looking for where the buyer's going to step in at support and resistance levels, okay? Buyers or sellers. So, getting back to this this is kind of scaling in. So let's say you did this, right? You have $150 worth of risk here, you have 100 here, and then 50 here. That's a total of $300 worth of risk, because if price came all the way down, then you're out. But let's say price comes in, fills you, your second one, you get filled, then it rallies just back 1 point. Now you're already up $50. And what you can actually do is just take both contracts off and you lock in the $50 profit. Or you could take one off here and hopefully and let it run and try and scale out. Okay, so there are multiple ways to trade or strategies of trading this zone, daily trade zone setup. Other ways of trading it is maybe just sit there and put the order in, okay, before when price is way up here, kind of like when price is down here, have the pending order halfway in the zone. And then you're risking $100 and maybe do a risk reward. I'm risking 2 points to make 2 points. Okay, here maybe you're risking 3 to make 3. Or maybe you're risking 3 to make 1 or 2, but you know you have a high probability chance of price actually getting that 1 point. It kind of offsets in the longer picture of so many wins on the other side. So these are different ways. While you trade, you're going to probably learn your own strategies. Maybe you're looking at other things going, hey, I really like this zone. These zones are to confirm, okay, to confirm maybe something you're looking at in addition. Or you're a brand new trader, you're looking for somebody to kind of tell you, hey, tell me when to buy and sell, okay? One of the best, easiest, most simple strategies out there is risk 1 to make 1, okay? Or risk 1 to make 2. So if you have a 2-point stop loss, maybe you're looking for 4 points on the upside. If you get a 50% win rate, you made money. If you get a 70 or 80% win rate, you're making a lot of money, okay? So that's it for part 1 of the tutorial for the daily trade zones. But on the next video, we're going to go over a couple other things, such as we're going to go over the gaps and also the VPOCs and also the Fibonacci extensions. So that's it for part 1 of the daily trade zones tutorial.